Hello viewers, my name is Sunday and you are welcome to Against FX. If you have not subscribed to my channel, please do subscribe, okay? I thank you all for your support, those who have already subscribed, but if you have not had time to do that, please just pause this video and subscribe, alright? That will go a long way, alright? And apart from that, you can share it with your friends, your family, your loved ones. All right. Trading is a skill set, it's a business that once you know it, you are rest assured that you now have another source of income apart from your 8 to 5 job. All right. So today I'm going to be treating a very crucial topic that most traders are struggling with. You might you might have gotten your strategy right. You must have gotten your risk management right. You must have gotten your trade management right. You must have gotten your technical analysis and fundamental analysis, everything. And you are wondering, why am I still not profitable? The problem is what? Your entry strategy. You need to have a particular strategy that you use to get into the trade. Some people use double tops, all right? All right, some people use double tops like this. Let's say, for example, price, for you to get a double top, that means there's a bullish trend, current bullish trend, then to create a high, one moment, a current bullish trend that will create a high, now pull back. Instead of breaking structure to the upside, it will create another head like this, all right? Then it will now start coming down. When it comes down, it will now take out this low, all right, like this, then it will now start coming down. So a double top is what? A trend reversal, all right? It's a trend reversal. It's a bullish reversal. Bearish reversals. I beg your pardon. So when the trend is bullish, when it gets to a particular resistance, then it creates a double tops and a double tops. Then you just know that that bullish trend is over. Then a bearish trend is about to start. Okay, now that is a strategy on its own. Now, for you to really know how to get into a trade like sniper entry, as most people will call it, I'm going to be showing you on the chart so that you understand it. All right, let's say, for example, a bullish trend. A bullish trend is a trend that it breaks, it create a high, pull back, break structure to the upside, create another high, pull back, and break structure to the upside. I know you guys, you must have seen this time without number, but just be patient and you will understand. This very one here now is what? A bullish trend, or we call it an uptrend. An uptrend is a bullish trend, all right? Then a bearish trend is a trend that is pulling back from coming from the top, push, create a low, pull back, break structure to the downside, create another low, pull back, break structure to the downside, create another low, pull back, then break structure to the downside. So this particular one here now is what we call a bearish trend, a bearish trend or a downtrend. When you hear a bearish trend or you hear a downtrend, it's the same thing. All right, you can see this one breaking structure to the upside, this one breaking structure to the downside. All right, so as a matter of fact, these are the characteristics of a market structure that you will see. Then apart from that, you now see consolidation. All right, you see a consolidation, then you now see a sideways market. That is when market is just going up and down, as in is making the same, creating the same high and the same low. Sometimes it will not get to this level, it will go up, then it will come down. You understand? It's just locked in a channel. All right, all these ones are type of market, but that is not the topic of today. The topic of today is how you can get a sniper entry at any point in time. Once your strategy forms, you see your lineups and how you can just take advantage of it immediately. All right, sniper entry. Now, now that you understand this uptrend and a downtrend, because if it's breaking structure to the upside, it's an uptrend. If it's breaking structure to the downside, it's a downtrend or bearish trend. Now, once this one you have understand this, the next thing is that let me show you. All right, it breaks structure to the upside. All right, it created a high, it retraced, break structure to the upside, create a high, retrace. Now, what did he do? He's breaking structure to the upside now. At this moment, he's breaking structure to the upside. He's supposed to create a high. If he failed to create a high, just watch it very well. That means something is about to happen. If he fails to take out this high here, that means something is about to happen. And what will happen? Price will now create what we call um, what we call a market shift that will now make uh, that will now make the current trend that is bullish to become bearish. All right, so you can now see. So how do you now capitalize on this based on what I've showed you now, this structure? I don't want to complicate it so that you understand it better. Then all you now need to do is now go and back test it. Then you will now be applying it in your day-to-day trading. All right. So what you need to now focus now is that how do I get in? All right. Now, number one, you must understand that once price starts to push to the upside, you don't need to get in at all. Now, for example, this is 4 hours. This is where I trade. This is 4 hours. Now, price has finished this bearish run and he has created a low. All right, he has created a low and you see a rejection. You see another rejection before. This rejection now is telling you that buyers are in. Then you now see uh, this candle close bullish. All right, you now see this candle close bullish. But what happened? This candle closed bullish. We now discover that this candle that closed bullish is a sign that buyers are in the market. From here, you should know because this bearish push got up to this level, but before the price, before the candle closed, buyers entered and pushed the price to the upside. That is why it opened from here. And when it opened, what happened? Sellers tried to push it down again, but buyers still overturned them and they now started pushing it to the upside. They pushed up to this point, but buyers still came again. struggled to push to the downside, he now closed up here. He opened here and he closed here. So, and he closed bullish. The next bar market opened here, but sellers still push the price to the downside, but buyers were much in the market, then they started pushing up again. Now, that is candlestick anatomy. I'm just telling you the story. What happened? What is happening? Once you see a candle, you should know the story. So, for you to get a sniper entry, you now know, okay, this is a bullish trend. How are you able to ascertain that this current trend now is going up? Bullish candle, another bullish candle, another bullish candle. 1, 2, 3, bullish. That is to tell you that no sellers here, they are buyers. They are now pushing the price to the upside. Will the price continue to rise like that? No, it will get to a point, there will be a moment of relief, what we call a retracement or a pullback will happen. Now, at this point, price started going up because you know your strategy. You don't need to jump and be, boy, if you want to scalper, they just jump and, they scalp. But you have your strategy. Now that you see price going up, what will happen? You wait for this guy, this price action to create a high. Now, price has created a high here. Price created a high here. You see, he has created a high. He got to this level. Then he now started pulling back. Can you see? He now started pulling back. Moment you see that price has resumed the pullback. Now, there's what we call Fibonacci retracement tool. All right, that Fibonacci retracement tool is divided into two that you must learn. We have the 0% to 100%. Inside of it, we have the 23.60, we have the 38.20, we have the 50%, we have the 61.80%, we have the 79.0%, then we now have the 100%. Now, it's divided into three to just make it simple. It's divided into two, I beg your pardon. From 0 to 50, all right? From 0 to 50 is what we call, if price action is going on, if you're on a bullish trend, an uptrend, from 100 to 50 is what? A discount level. Then from 50 to that 0% up is what? Premium level. Now, how does it work? If you are on a buy, price will go up and create a high. All right, once price creates a high, then what you now need to do is to bring out your Fibonacci tool, drag it from the bottom to the top where it stopped before it now started pulling back, before it started the pullback or the retracement. Now, your entry, you must know that price that has gone up must pull back to a discount level, which I have just told you that this Fibonacci tool is divided into two. From 50 above is a premium level. From 50 below is what? A discount level. Now that price has created a high, when it's pulling back, is supposed to pull back into a discount level before the price will rise again. All right? But if the momentum is very, very strong, there are levels that we call a continuation level, Continuation level, let me quickly give you to you guys. The continuation level in this Fibonacci ratio, all right, 23.60. If price found support, if you see an aggressive up a bullish trend, all right, if price pull back to 23.60 and you see it to turn again and you start going up, that is what? A continuation level. That means that trend is very strong and powerful. It will just retrace a little, 23.60, it will continue, it will reverse and it will start going up. Or if you get the reverse and get to this 38.20, all these are continuation level, 23.60, 38.20. This is what these levels are what? Continuation level. Price will return, get to that point, found a support, then it will start pushing to the upside. So the one I'm teaching you guys right now, presently, is what? The is how to get an entry. All right. Now that he has created a high, you bring out your fib tool, measure from the zero where the 100%, put it down, drag it up where the 0.0%, put it at the top where he created the high. All right. Now, for more clarity, this point here is what? Is the high that price action has created. This is a low here. All right. This is a low. He has created a high here. He has created a low here. He has created a high here. Let me put this so that you understand what we are doing here. This is a high. This is the low. Now you put the 100% on the low, put the 0% on the high. All right. So you now drag it a little to your right hand side and leave it. As you do that, you will now be waiting for price action to pull back, all right, to pull back below 50%. Once it pull back below 50%, anything below 50%, if it likes, let it get to 60%. Sometimes it can get to 70%. Sometimes it can even pull below it a little. But from 50% down to 100%, they are what? They are discount level. The only problem is that when you now see price pushing below, but it breaks this 100%, is no longer a bullish trend. Something else is about to happen because he's violating this strong low. All right, he's violating this low. He's not supposed to violate this low. He's not supposed to violate this support leg. Once you see price violating a support leg like this, that means market shift is about to happen. But my point here is that once you see a pullback, that pullback must get to 50%. It must pierce the 50%. In some cases, it will it will it will break it, then close above it. Some cases it will come to 61%, some cases it will get to 79%. All right. Does that mean that if you just see it get here, you just jump in? No. Allow it to close. You now see this rejection now is now telling you that there are still buyers in the market. Even though you see price coming down, retracing, but look at this candle, this long candle here, this very one here. You see that you can easily notice that there are buyers. The price opened here, it pushed to the downside, but buyers came and they pushed it up again, like that, until they were able to take over from the sellers. That is how it is, guys. Now, once you now you are seeing a rejection, is a sign that buyers are still in the market. Wait until you see a bullish candle with a rejection. All right? Then you will